CrowdStrike stocks comes tumbling lower, and we still see more fallout from the global tech outage. We got to ask ourselves, is the Trump trade over with as Biden decided to exit the race? And we look at the fear and greed index. Today, we're able to get back into greedy territory. We're going to talk about the key volume profile levels that we need to pay close attention to, like the one we talked about over the weekend and in this morning's video, the minus development area. We came right up to it. We might have missed it by a tick or so. And what do? We get a knee-jerk reaction on the way down roughly 12 points from that test of that minus development level. Now, let's not forget, we are in the midst of earnings season. Tomorrow, after the bell, we have both Google and Tesla, along with Visa and Texas Instruments, with earnings coming out. So right now, we can see some big moves in the market, either up or down, depending on how the markets perceive the earnings. And we look at the expected movers tomorrow. Tesla is going to be the big expected mover out of all the stocks that have earnings coming out tomorrow with a plus or minus 9%. We have Google that is expected to be up plus or minus 7% on the day. Now, when we look at CrowdStrike stock, it was down almost 13.5% today. We go ahead and we measure right up here from the recent high down to the lows today. We can see it's down roughly 34%. That is one heck of a major correction. It was able to get all the way through this distribution area on the composite profile. We come over and look at stocks like NVIDIA. NVIDIA back on the move again, saying, you know what? I don't care right here, right now about that darn pesky ABC pattern that you drew to the downside. Instead, my eyes are set on trying to fill the gap. Then we look at SMCI, another hot stock in the AI hype. And what do we see? SMCI was down $10.27, roughly down 1.29% on the day. We take a look at Google as they have earnings coming out tomorrow, was up 2.21%. And then we look at Microsoft. Microsoft was able to recover a bit today, up $5.81. So it looks like tech is starting to rebound. And that's kind of what we talked about when we talked about the Nasdaq over the weekend. I talked about a potential head and shoulders pattern. Left shoulder, head. Could we bounce up and start to form the right shoulder? And then will the right shoulder end up producing a lower high? Or are we going to see the Nasdaq going ahead and running back, making new all-time highs once again? I've been warning you guys about the MACD indicator. It has been extremely elevated. We've had divergence as the Qs continue to make new highs, but now we've had the cross to the downside. Will we see the MACD indicator start to try to firm up and maybe try to make another run up? And if we do make it all the way up and take out all-time highs, are we going to see another divergence in the MACD indicator? As we look out here on the hourly chart, what do we see? MACD indicator is crossed to the upside. However, we have a gap behind from today. And then when we look over here, we also have a large gap to the downside that's been left behind from last week. When we look out here on the 30-minute chart, now when we look at this, we also have an ABC pattern on the way up, but notice where we basically stopped today. We came right into the minus development area, boom, knee-jerk reaction on the way back down. We come back up here, and now we're starting to consolidate, which lends to the case we're probably going to go higher, trying to work our way towards the next minus development area. And if we grab our Fibonacci extension tool, and we go ahead and we measure A to B equals C to D, look where that brings us, just below that other minus development area. And we'll see, do we start to get up there? Now, as we come over and look at the Nasdaq futures markets, what was one of the key levels we talked about over the weekend? That was this key level right here, which is basically value area low. We closed below it. We failed to come back and test that level. And know what? We went ahead and took it out today, but let's not take our eyes off the prize, right? We have that minus development area on the Nasdaq about 20,185 to about 20,200 or so. Now, as we come over and look at the daily profiles, one thing to be concerned about, to the downside, we have the POC or the point of control from Friday, which has not been tested. We also have a gap that was not completely filled last night that could be a problem moving forward. And then we look at the volume profile levels. We have value area high up here at 20,030.25. We have the point of control at 20,003.25, and value area low is going to come in at 19,890.75. Now, since we're closing right near the point of control, we don't have a huge edge. I'd like to see, do we break above value area high, start coming back down potentially for the rotation lower, or my preferred scenario would be we start coming all the way down sometime tonight or early tomorrow. We break value area low, and then we start to head on the way back up. Now, let's talk about what Jim Cramer had to say. Joe Biden will never drop out of the presidential race. So I guess Jim Cramer is not just the best contrarian indicator we can use for the stock market, but if you want to talk politics, I think Jim Cramer is a great contrarian indicator on that front as well. And that's really going to lend to the case that, is the Trump trade over with? Let me know in the comments section down below, because they talk about the Trump trade where we could see more inflation in the market. We could see corporate earnings rising even more, especially if Trump gets elected and then enacts some of the tax cuts, or at least extends the tax cuts that have already been on the books. Then we look at this article right here. Amazon stock gets a pair of price target increases with Q2 earnings right around the corner. And if we look at Amazon real quick, it was down for the day. So Amazon gets an upgrade, but it still closed in the red. That is something to take note of, especially when you look at the overall stock market, where we saw the Dow up 127 points. The Nasdaq was up 280 points, and the S&P 500 was up 59 points. The Russell 2000 was up 3.37 points. Now we look at advancing issues versus declining. We had 73.3% of issues advancing for the day versus 24% declining. Then we look at the sectors across the board. The only sector that was in the red today was actually energy. Every other sector was in the green by some degree or not, with technology leading the way today. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day. And you can also get a $150K account for only $40. You get a $250K account for only $40. And you get a $300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. So when we come over, we look at a chart of crude oil back on the way, back down once again. MACD indicator has been crossed to the downside for the last, week and a half or so. And now we're going to see, will crude oil continue to tumble lower? Now, lower crude oil prices is favorable for the bulls in the market. Why? Because that's going to help out the fight on inflation. Then we look at the dollar index. Dollar index today was down a whopping 4 cents on the session. However, we saw yields starting to rise once again. Yields today were up roughly 0.023. And rising yields normally is going to be a headwind out here for the market. But if we look at the volatility index, there was no fear. The VIX was down almost 10% on the session, down 9.93%. Now that is problematic. Why is that? Whenever the VIX is down or up 10% in one single day, then that means the next day it's highly probable we're going to get an adverse reaction. If that's going to be the case, where is that volatility going to come from? Could it be some of the news that we have coming out tomorrow at 10 a.m. with existing home sales, the Richmond Manufacturing Index, or is it going to be more news about who is going to be running against Trump in the presidential election? Let me know your thoughts in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, as we come over and look at the SPY, today we started to get a bounce on the way up, which is exactly what we talked about over the weekend. Now, I'm expecting the SPY to make it to at least a 50% retracement. However, do we come up a little bit and then come down maybe a double bottom before ultimately going up? That is something we do want to go ahead and pay attention to. On the 1 hour chart, MACD indicator crossed to the upside. And on the 30-minute chart, we talked about this over the weekend, how the MACD indicator was essentially basing out and it was setting the stage to get a pop up. Now, one thing problematic for the bulls is we do have a gap below us, but then bulls might say, well, what about the gap all the way over here from a few days back? That is a very valid point as well. So we need to pay very close attention. Now, right now, MACD indicator is showing no signs of weakness. However, we'll see if that is going to change in the very near future. Now, I want to share with you guys a trade that we talked about in this morning's video. We're going to start off looking at the 30-minute profiles. Now, what did I say this morning? I said, if we start breaking below 55.79 and a quarter, then we simply want to go ahead and play a quick short. Where down to? Right down here towards 55.73.75. Did we get it? Yes, we did get it on this move here. We came very close on the first attempt. So that would have been a trade we had to take a 2-attempt scenario. But for all intents and purposes, we stayed above value area high from the overnight session for the whole entire session, for the whole entire day. We had one little dip down, then boom, instantly bought right back up. Now we come over and look at the 4-hour chart with the weekly profiles. Let me go ahead and remove some of these drawings real quick. This is what we had drawn out from this morning. We had the Fibonacci retracement and we had this minus development area. Look right where we came to today. Oh, right to the minus development area. We're also able to take out the untested value area low, which I warned you guys about on Sunday. And now the question is, what do we do from here? We've made it to the 38% retracement. Do we start to get a knee jerk reaction on the way down and then ultimately start coming back up? Meaning, do we form some type of ABC pattern that's going to go ahead and work itself to the upside? As we come over, look at the daily profiles. Other than right over here, we basically stayed above value area high for a majority of the day. Now, I would feel a little bit better about this if we would have been able to take out the untested point of control down here at 55.49.25, you can see we saw that open gap. We barely missed filling the gap last night. And now the question is, we've already had a little bit of a knee-jerk reaction down from the MDA level. Are we now going to go ahead and push back up? If we start challenging the high from today, then yes, I believe we're going to push at least to the other side of the MDA level. We start getting above that area, then I really want to look right over in this area, anywhere from this candle body right over here, down over here to the candle wick. That would be my next area of attraction. That's going to be anywhere from 56.31 all the way up here to about 56.40. So if we can get on the other side of this MDA level, that is going to be my next point of interest that I want to be heavily focused on moving forward. Now, as we come over and look at the volume profile levels we'll be dealing with for tonight, 56.15.25 is going to be value area high. The point of control will come in at 56.10.75. Value area low will come in at 56.86.25. Now, I want to show you guys something you cannot see with a basic candlestick chart. This afternoon, we seen the S&P doing what? Trying to come right up here towards the minus development area. How did we know it was going to fail? Was it simply because we marked off a volume profile level? Or did it have more to do with what we could see with Bookmap? We see we had two aggressive buyers come in, but look at all the selling orders sitting right there above us. With all the selling orders sitting up here and not being able to push above the last bit of aggression out here on Bookmap, that's basically telling us that, you know what? The market is likely to go ahead and fail and start coming back down. And you can see that's where we get that knee-jerk reaction with a 12-point move back to the downside. So tonight, if you're looking to go short, here's what I want to see. I want to see us break above value area high and then potentially turn back lower. I will be paying attention in tonight's live stream, not only to the NQ, but also to the S&P 500, because if I get a shot at this rotation trade on the way down, I'm probably going to go ahead and shoot my shot at it. Now, if you guys want to learn an easy way to trade volume profile using order flow, watch this video right here.